The real estate market here in the Greater Toronto GTA has been busy in the news this past week. In today's video, I'm sharing 4 highlights that you need to know if you're wondering whether to buy, sell, or hold. Let's get into it. Number 1, good news for first-time home buyers. Effective April the 16th, first-time home buyers will be eligible to withdraw up to $60,000. Currently, the limit is $35,000 from their RRSPs to put towards a home purchase. Number 2, here is more good news for first-time home buyers that you will want to use or share with anyone you know that is looking to get into the real estate market. This news is expected to be officially announced next week with the release of the federal budget. And what is this big news? The return of the 30-year amortization. First-time home buyers purchasing new construction homes will now be eligible for 30-year amortization periods. Currently, those buying with less than 20% down are required to take an amortization period of 25 years at most. This change will make it easier and more affordable for first-time home buyers to buy real estate. Number 3, the foreign buyer ban has been extended to January 1st of 2027. This could have a negative impact on new construction starts, especially here in the Toronto GTA. However, the changes we mentioned in terms of first-time home buyers may help developers regain some lost ground moving forward. Since the introduction of the foreign buyer ban and higher interest rates, condo pre-sales have been lagging. And number 4, deals with the Bank of Canada rate announcement and how it affects you. And I'm getting a lot of questions recently about what all this means and whether you should buy, sell, or hold real estate. If you're not sure what to do in this ever-changing real estate market, well then this message is for you. Let's take a closer look. The Bank of Canada recently announced that it was holding its key overnight lending rate at 5% for the 6th consecutive time since July. Now, this is the rate that banks lend to each other, and in turn, it affects what rates we, the consumers, will encounter. The central bank noted that they are still seeing underlying inflationary pressures. And although signs are moving in the right direction and core inflation numbers, which excludes sectors such as food and energy, which are still relatively high, these core numbers have been trending downwards. The bank wants to ensure that this trend is stable and not just a temporary reduction. Policymakers said that they need to see these changes hold for a longer period of time, and as such, they are holding their quantitative tightening policy and they are holding steady in terms of the overnight lending rate. The bank has hinted that if things keep improving and the cost of goods remains low and in check, well, they might consider making it cheaper to borrow money in the future. But they also cautioned that if prices start to climb quickly again, they're also ready to make borrowing more expensive in order to slow things down in the marketplace. Well, for now, the Bank of Canada is taking the approach of waiting and watching to see how things unfold. So, should you just wait and watch? If you're thinking of making a move and wanting to get on with life, you're most likely asking, what does all this mean for me? Should I buy, should I sell, or should I hold? Well, for now, borrowing money to buy a house won't get more expensive, but it won't get any cheaper either. The current rates and qualification standards is making it still challenging for many buyers to qualify for a mortgage. What do you do if you want to get into the market? To trade up or to downsize? What do you do if your mortgage is coming up for renewal and you are now facing a higher interest rate and considerably higher monthly payments? And home sellers, you're probably wondering what you should do. Should you sell now or should you wait and see if home prices rise and cash out then? What do you do if you need to both buy and sell? There is definitely a lot of questions being asked, and the answer to these all-important questions is, it depends. There is no one size that fits all. It really does depend on your specific situation. Knowing what your options are is key to making the best and informed decision for you and your family. There are so many variables to consider when making this all-important choice. In this economic environment, it is a smart move to plan to strategize. Have questions, want to know how your plans are being affected by all of these variables and what your options are that you have available today and in the near future? Want to know whether it's your best interest to buy or sell or hold? Well, reach out for a free, no obligation discovery call to uncover your options. You can reach me direct at 905-965-5902, or you can click on the link to my Calendly booking page below to schedule a time that's convenient to you. I'm Evelyn Lopes, and with over 35 years of real estate experience, there's great value to be shared, and I'm here to help, and just a call away.